having on board Mark Mobius. I always look forward to our interaction with Mark Mobius to get a sense that what he makes of the market. And Mark, the first question I want to understand from you is that which part of the world you are joining us from?
Good to see you again.
No, so which part of the world you're joining us from this time?
Right now, I'm in the lovely area of Italy.
Wow, Mark, every time I interact with you, I just realize that, how much of global travel you do. So before we get into specifics of market, I just want to understand that what do you make of this week's rout? What happened on Monday? Do you think that was technical in nature?
No, it was not technical in nature. You must remember that there have been a lot of things going on in the world today, lots of uncertainty. I would say the key word is uncertainty in view of the fact of the situation in the Middle East, situation in Ukraine, the situation in the Taiwan Gulf. So all of this area, a breakdown is a problem and creates lots of uncertainty. So in addition to that, of course, the situation of the election coming up in the United States has created additional uncertainty because, as you know, the policy issues are quite stark. The differences are quite stark between the Democratic Party and the Republican Party. So all of these put together creates a great deal of uncertainty. And then when you have the situation in Japan, that set off a sort of a chain reaction. And of course, the US market came down, as you know.
Is there a way which we can figure out whether the yen carry trade, the excesses have got flushed out, or do you think there's still some more left in the system?
Still more left in the system. There has to be more of this, but most of it has been, of course, wiped out. But of course, we probably will see more problems going forward.
There was also this niggling worry last week and early this week that US economy could slip into a recession. That's a view coming from Goldman Sachs, and they are assigning a 25% probability. Do you think that needs to be seriously looked into?
Yes, and the key word here is money. Money supply in the US has been slowing down. As you know, during the COVID crisis, the Fed increased money supply by 30, 40% at some point, and then they reduced it dramatically. And we're now feeling the effects of this reduction. If you look at the money supply growth in America, it's very, very low now. And that, of course, means that not much money is going to go into the market or into business or in the economy. So this is the real problem and the longer term problem going forward. So I believe we have more problems in the US, and of course that'll affect the global situation unless money supply is increased much more than it is now.
Mark, so is the world prepared for a recession? Because at the beginning of the year, we were talking about a bit of a slowdown. Nobody was, in a sense, talking about a recession hitting US. And do you think if a recession actually happens, which is the worst case scenario, could that lead to further unwinding in equities?
Of course, the equity market is the signal. Usually you have the equity market coming down before the actual economic effects are seen in the economy. So the equity market is the signal to what's going to happen to the economy.
What should one do? Start raising cash? Buffett has already sold 50% of his stake in Apple. He's sitting on largest T-bills ever.
Yes, exactly. That's a very good indication of a smart investor who sees the problems coming down the road. And he's got a pretty good sense and a pulse on the market.
What should one do then? I mean, for those who rely on you for your sense and advice, is it time to raise 15-20% cash?
I think it's a good idea to have maybe 20% of your portfolio in cash, maybe a little bit more, because there'll be opportunities down the road. And it's a good idea to have some dry powder, let's put it that way.
Mark, I distinctly remember when we spoke to you last time, you mentioned that you have exposure in Vodafone, Wari, and several other infra companies. Are you still holding on to them?
Yes, of course, we've increased the cash amount in my portfolio, but yes, so those are good companies. But now I'm looking more and more at the raw materials stocks, companies that are involved in mining and that sort of thing. I think that's going to be very interesting in India because the economy is growing at such a pace that there'll be more and more demand for these raw materials.
Shouldn't it be the other way around? Because if a recession is around the corner, then commodity prices will come down. That, in a sense, will have pressure on raw material and producers then.
Well, that may be the global situation, or at least in the US, but not necessarily in India. I think the demand in India will continue to be high given the very high growth rate that you're seeing. I must say the RBI has done a very good job in uh, looking at interest rates and looking at money supply and being a very moderate influence, and that has been having a good effect. And of course, that high growth rate in the economy is going to be very good.
Everyone is of the view that China is good, is cheap but not good. India is good but not cheap. What are your thoughts?
Yeah, that's a good point. By the way, on the issue of China, I do think it's important for India to allow Chinese entrepreneurs to come in to India and inject the not only their money but also their technology into the Indian economy. Um, of course, I realize that there are concerns about the problems up north and so forth. But at the end of the day, I think it's important for India to welcome Chinese investments because that'll accelerate growth in India, generally speaking. But yes, China now, of course, is looking at very slow growth. It's a much larger economy, so we can't expect 5, 6, or 7% growth. More likely, it'll be growing at 3 or 4% going forward. But it's a huge economy, and there's lots of opportunity in China going forward. Of course, India is really where the action will be going forward as well.
Okay. Mark, so after Vodafone, have you added any other stock in your India portfolio?
Yes, but I can't tell you what it is because we're still adding. But yes, we have added. As I
Give us a
say, we're
hint.
still sitting on more cash.
Give us a hint. A mid cap, small cap, which sector it belongs to?
Right now, large cap are more attractive. In the past, the mid cap was more attractive to us, but now large cap is where we want to be.
Mark, why are foreign institutional investors not very convinced about investing in India? I mean, you're getting flows which, in a sense, are okay, not great.
I think the problem is it's quite complicated to make investments in India for investors. In America, the way for them to invest would be through index funds. But even the big institutional investors find it quite difficult. There's lots of bureaucracy involved in putting money into India. So that's, I think, a big problem and has to be looked at more carefully by the central government.
Say complicated, what exactly you're referring to? Because the FDA and FPI route, I think, is very well open, and there are a lot of funds via which I'm sure everybody can invest. So when you say it's complicated, what is that complication?
It's a tax issue, as you know. There's a lot of tax calculations that have to take place when people are buying and selling, foreigners are buying and selling in India. So that's I think, the big issue.
Mark, in the past, you've owned stocks like Reliance, you've owned stocks like Vedanta, you've owned stocks from the IT space. Are any of those contra trades looking interesting to you?
Yes, they are. The large caps are looking interesting, but as I said, the emphasis for us now would be on raw materials. But sure, Reliance and these other big stocks look quite good, particularly in view of the fact that they're going to be benefiting from this incredible growth in India. So generally speaking, those large caps with strong balance sheets will do fine.
Mark, you've owned a lot of niche IT companies in India, Persistent, C Systems. Is there any specific tilt towards niche IT companies in India?
Well, I would say going forward, the interesting area will be in the hardware. Of course, software in India is so well developed. As you know, you have global leaders in software, Infosys, Tata, and so forth. But going forward, I believe the emphasis is going to be on developing computer hardware, chips, semiconductors, all kinds of other hardware related to IT generally. So I believe that at the end of the day, India will become very, very important in this area, just as China and Taiwan and other countries are important.
Mark, but in general, do you think it's time to be cautious in equities, whether it's Indian equities or global equities? Do you think everywhere equity as an asset class is now richly priced?
No, I think it's important to remain invested in equities globally, in good equities. And by the way, that's the key, getting companies with a strong balance sheet, with good earnings growth, with a high return on capital. These are the stocks that you want to hang on to and buy more of when the prices come down. So you have to be involved in equities if you want to retain and grow your capital. But at the same time, given the very great deal of uncertainty, it's important to have some cash, some dry powder to put in when the market crashes.
Mark, if one looks at the combination of gold and Bitcoin, we've often seen that gold and Bitcoin, they are not parallel, they are opposites. Early this week, gold corrected, bond corrected, Bitcoin corrected, equity corrected, currency corrected. I mean, you normally don't see this kind of a synchronized sell-off.
Yeah, it's interesting to see what's happening to Bitcoin. Bitcoin has come down and probably will come down low. It's headed down much lower than we are seeing it now. But gold is holding up pretty well. So it's a very interesting difference. And by the way, the strong gold is an indication of the uncertainty that we see globally and the kinds of uncertainty that people feel when they look at the markets.
Mark, the leadership markets in the world right now, AI US tech, which is NASDAQ, and India when it comes to a large emerging market. Do you think the leadership in both these markets, which is global US tech and India when it comes to a specific emerging market destination, do you think the long-term bull market is still intact?
Yes, I believe the long-term bull market is intact. And because the US is leading in this regard, you can see there's been a correction, but it's not a big correction in the context of what we've seen in the past. So as long as that S&P 500 continues to move up with corrections along the way, 5%, so forth, then I believe that you're going to see globally a very, very good bull market in most countries around the world, particularly India.
Do you think this entire India story, which in a sense right now the bedrock is domestic institutional investors, that's a real deal, and irrespective of the market correction, the SIP flows and domestic inflows into Indian stocks will continue?
I believe flows into Indian stocks will continue, and as foreign investors become more and more comfortable with going into India, making it, and of course, if the system is made easier for funds to come in, then I believe you're going to see a continuation of this situation where more and more foreigners have holdings in India and where the Indian market continues to perform very well. But you must remember, at the end of the day, it's not foreign investors who drive the Indian market, it's domestic investors. It's interesting that the RBI recently said that they want the banks to attract more deposits. And probably one of the reasons for this is that there are too many retail investors going into the market and gambling. And it might be a good idea for them rather to keep some money in the banks rather than in stocks. But that's just a very short-term kind of view.
Okay. Mark, if one looks outside equities, what else to your mind is looking attractive right now? If recession is there in the world, do you think money could move from equities to fixed income, maybe bonds?
Well, right now, in the US at least, fixed income looks very, very attractive because you can get 5% on US dollars. And that's one of the reasons, by the way, I believe it's a good idea to have some cash around in 5% deposits, short-term deposits. So it'll be available for investment in the market. So yes, right now, interest rates are very attractive and probably will be coming down. So putting some money into bonds, short-term bonds, will probably be a very good investment.
So Mark, when you say that you expect a correction in the market, it is largely because of technical factors, or it is largely because you think that the earnings in a sense will disappoint?
No, it's mainly a money supply problem. As I mentioned, the growth of money supply in the US has slowed down dramatically. The Fed, started during COVID, putting an incredible amount of money into the market. Money supply increases were 20, 30, 40%, depending on which month you were talking about. Now we're down to single digit increases. And of course, that means that money is gradually being drained from the market. Everybody's looking at interest rate, but that's just one part of the equation. The big part of the equation is actually the amount of money in the system.
Mark, so hypothetically, if you have to make one investment for next 6 months, only one investment, where would you bet? Next 1 year, where would you bet? And 3 years beyond, where would you bet?
In all cases, I would put money into the US market and into the Indian market, probably 50-50.
Your best idea for next 6 months is equities within that India and US. Next 1 to 3 years, it is still equities within that India and US. And next 5 years plus, surely it is equities. And again, there you will not throw in China. You would still put in a combination of India and US.
Yes, of course, conditions will change over time. And there may be a time when other countries begin to look attractive, such as China. But I think it's important to remember that the Indian growth path is not short-term. It's a long-term development that will continue for many years. So India is the place to be. And of course, see, the situation globally is that the US market is reflecting more and more of what's happening globally rather than just the US. If you look at some of the big stocks in America, you'll find that earnings of these stocks are not coming from the US only, but from other countries around the world, particularly the emerging countries. So when you invest in the US market, you're investing indirectly into global equities, and particularly going forward more and more India. So it's a good idea to have both Indian and US equities in your portfolio.
So Mark, before we wrap it up, just a couple of final questions, which is that I'm going to flip it and say that what you like, but if you have to go short or sell something where you think a 20 to 25% downside is anticipated, what would be your best short idea for next 1 year?
Best short idea maybe would be in some of the markets in Latin America. Brazil is reasonably attractive, but some of the other markets in Latin America are uncertain. Then if you look at some of the countries in Africa, you'd probably want to go short on some of those. South Africa, as you know, is going through lots of problems, and that's a market that you may want to short. But that would be the only ones. And Asia generally still looks very good.
Mark, we are calling the bull market in India as the common man bull market. It started because of the force of domestic institutional investors. The previous bull markets have been named as TMT bull market or infra bull market. If the starting point of this bull market, which is in Sensex terms, let's say was 40,000, how long do you think this bull market on the Sensex or Nifty will go before it tops out?
We're looking at a 5-year continuation of this bull market, in my view. Of course, there'll be corrections along the way. You'll get 10%, even 15% corrections, but generally speaking, this is a 5-year trend. And as long as the growth rate continues the way it is going, we can go on for much longer than that.
5 year you're counting today, and then 5 years you're counting from the bottom, which is 2021, and then 5 years.
Yes, yeah. It looks, India still looks terrific.
My question is just to get it right. When you say it's a 5 year bull market, your starting period is today, or your starting period is the bottom of this bull market, which was in 2021?
Starting from today, I would say.
Oh, wow, 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 wow. So you feel that this bull market still has another 5 years to go? Wow, again.
Yes. Not only 5 years, 10 years to go.
Okay. So what should one do then? Okay, I like the answer. I love Mark Mobius for saying that it's a 10-year bull market. How can I benefit from Mark Mobius' wisdom?
Well, the best way is to invest in funds, in our funds.
Well, that's only for foreign investors. I've got a local audience who may not have that vehicle to invest. So what would be advice to Indian local crowd who do not have the ability or perhaps the option to invest in your fund? How should they benefit?
Oh, they should buy my new book.
I don't know. This is what the fourth book which is coming out now?
Yes, it's a new book. It's in India, and it's quite easy to get, quite reasonably priced, and I highly recommend it.
So if not the Mark Mobius Fund, maybe the Mark Mobius book. All right, Mark, really appreciate your time. Thank you for joining us, and greetings from India once again.
Thank you.
Well, let's take a break, shall we? Let's take a break.